Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Monday, May 12th, 2025. Let's take a look at the charts. I'm going to jump into the daily chart right out of the gates and just show, this horizontal channel top. We closed above it a week and a half or so ago and gapped right back below at 287.33. I have it as an intraday support level. I think the takeaway here is the fact that we closed above this 1.5 week channel top, which I'm showing as a 3-star weekly support. In other words, it is a level above which I am expecting over the next 2 to 3 weeks, 3 to 5 or so, 368.80. And that also lines up pretty well, at least right now, with a technique that I've used for years, the full channel extension. When you have this well-defined range, this well-defined channel, you've got the full channel extension is also in that same vicinity. You could also do kind of the high minus the low, add to the high. It'll take you in the same vicinity. 366.80 is dropping daily. I'm going to call it a 3 to 5 week or sooner objective. It also will eventually line up pretty well with some significant formations and retracement points on the weekly chart in the low 350s. You have this former channel top, if you recall, if you've been following the Tesla report for more than 6 months or so, you might remember the settlement above this channel top indicated the 5-year channel top, which we didn't actually test, but we came pretty darn close, as you can see. Then we collapsed back, and when we closed back below this channel top, it indicated continued price collapse. So this area is still important in the low 350s. And as it turns out, as we move through the next 2 to 3 weeks, this 366.88 will actually drop. And it is this 2/3 speed line that we're expecting, not necessarily the number 366.80. So keep that in mind. This could eventually be just a low 350s achievement before the market could then fall away again as we move into later summer. This is a multi-week area of resistance that may well, as I show here, contain buying for more than a month. We could fall away from here through the third quarter perhaps. And yes, if we can close above this area at the end of any week, I would re-anticipate this longer-term 5-year channel top, 513.36 and climbing, as in reach. The timing of that, this took all of about 3 to 5 weeks. This time, more like 3 to 5 months as a possibility, but I don't want to get too far ahead of myself. Back to today, 294, 295.30, able to contain weekly selling pressures. Now, we could slip below this, and I don't think it would have a lot of meaning. It is a day-to-day settlement above 295.30 that maintains the integrity of this buy signal to 366.80. But on an intraday basis, breaking or opening below 295.30 does allow 287.33. And if we break 287.33, excuse me, then we could test 275.06. This scenario I'm not expecting unless there's just some kind of broader market bearish news that is hit and allows that to play out. But left on its own, excuse me, 295.30, this horizontal channel top, able to contain weekly lows, and once again, above which I'm expecting 319.02 over the next few days, perhaps. I'm calling this a 3 to 5 day objective, but with present volatility, it could be easily Tuesday, Wednesday testing of 319.02, a 3/8 upside Fibonacci from this December low against the more recent December high against the more recent April low. 319.02, able to contain daily highs. I wouldn't commit to more than that, given the overall context of having pushed through this consolidation area, expecting the mid 360s and dropping over the next 3 to 5 weeks. If we can close above 319.02 over the next few days, we're just another week or two from reaching our overall objective at the 366.80 descending speed line, which drops over the next couple of weeks into the low 350s anyway. So that is the upside big picture. There's a little bit at 303.94 that may capture intraday buying. If we push through or open above 303.94 today, 319.02 attainable today. A downside, once again, breaking or opening below 295.30 will keep 287.30, should yield at least allows 287.33 intraday. That could be it for the day, perhaps. it depends on the dynamic, of course, but breaking or opening below 295.30, I would expect 287.33, but I wouldn't expect 275.06. 275.06 is once again this newly formed rising channel bottom that you actually see here. I think the scenario that could unfold to the downside is if we close today back below 295.30, then you can anticipate 275.06. This could be a 1 to 3 day objective. Until then, holding above 295.30 does maintain the 3 to 5 week or sooner buy signal that is expected to yield 366.80 and dropping. If we do, though, once again, close below 295.30 today, then I expect 275.06, let's just call it within several days. Would this be Tuesday, Wednesday, or Thursday? Somewhere in there, 275.06 can contain session weakness. We might even round up from here. But just so you know, if we close below 295.30, our expectations for 366.80 have essentially been neutralized, at least for the time being. And with that, over the next few days, I would expect 275.06. Now, 275.06, able to contain daily lows if tested later in the week, possibly through the rest of the week. If you're an aggressive 3 to 5 day swing trader, I have no problem with you buying 275.06 and holding it overnight, assuming we, of course, close above 275.06. Last thing I'm going to say is, when might we anticipate what I consider to be meaningful kind of near-term support, weekly containment ability that may actually contain selling into June trade? That is in the low to mid 240s right now. And I only expect this area unless over the next few days or later in the week we close below 274.06. Then we have a clear 3 to 5 day sell signal into the 243.09 to 246.59 area. This is an extreme channel bottom and a rising 2/3 speed line. They're perfectly parallel. The 2/3 speed line is basically the April low against last Friday's high. And if you go 2/3 of the way back, it is right there at that line. You draw a trend line from the April low to the 2/3 pullback point in the time frame in which the high was made. And that is a trend defining line study, and it is backed up by 243.09 channel bottom. So I like this area to buy into aggressively on more than a weekly basis, perhaps. We could bounce nicely from here and potentially round up to new highs. So we'll just see how this all new pullback highs, I should say. So yes, we are bearish into next week below 275.06. And inversely, we are bullish into next week and really into early June above 295.30. Anything else to say beyond what I already have? Last week, we put out 2 stock picks on Lockheed Martin and GitLab. The week before, I could go on and on and on. And many of them are still in play, relevant, waiting to occur. We've had some great stock picks the last month or two. So check that all out for free by going to wickedstocks.com and taking advantage of our 5-day free trial, where you will also see our daily triple Q and our daily SPY analysis. If you're a day trader of Tesla, a swing trader of Tesla or NVIDIA, I really think you owe it to yourself to have your triple Q and SPY analysis also at hand, because they do correlate pretty well. So, I think that's it. Go to wickedstocks.com. I will be back, of course, tomorrow with Tuesday's Tesla. You have a great day.